Hello traders, this is Rich from Tradesight. This is the market preview for Wednesday, March 12th, 2014. We had kind of a little bit of a distribution day today where we're down 12 handles on the ES, down 19 on New York. The Dow was only down about 75 or so, but the fact of the matter is we actually really did some pretty good technical damage. The market internals were terrible. The advanced declines were weak on both sides, and the trend closed up at 1.25. And this is after kind of just kind of a back and forth day for most of the day, but it really started to roll to the downside, and there was a real lack of bidding interest as the session went on. So let's move on and take a look at the pure price patterns just for the ES and the NQs. Then we'll move on to the levels and whatnot. Here's a look at the ES futures. So you can see that we went up and tagged last week the upper boundary of that channel. That channel goes back. I'll zoom this back. It's very, very well defined and very, very much in play. Tag that, started to return back down to the low. So we could easily travel all the way down to 1765 or so, 1770, and not even have a real correction in place, and really just span the trading range here. So that's very, very possible. So definitely keep that in mind. We'll take this one bar at a time. Right now we do have one negative candle on the tape, but that doesn't mean that we're going to follow through. We really have to see that happen and see at least another decently negative day. Here's like the NQ futures, which obviously have a little different look to them than the ES. We had previously some more relative strength, but since this little exhaustion gap to the upside here, we really haven't been able to do much, and right now we've settled down below the complete range here, and this gap's still open, so that's definitely going to be on the table potentially tomorrow. So definitely be aware of that, and we've got a ways to travel down here before we find any real support. So if we do roll to the downside, which isn't a foregone conclusion, we could travel a pretty good distance here before we find any support. But keep in mind for the bull case here, if they do straighten this thing out tomorrow, they could easily recoup this and bust this out to new highs and put the squeeze back on without having to move very far. All right, so here's a look at the ES futures with levels. So you can see that we're starting to lose this 8/8 level. I haven't lost it yet because we've got to follow through down below it. We came down and toyed with that 10-period moving average, which is really key, which defines our short-term trend. We're still short-term positive here. We've been so since the beginning of this whole move when we jump back up above the 10 EMA. So we've been positive here for at least a month now. So we're starting to roll back to the downside, but it doesn't really mean anything until we lose that 10 EMA and follow through to the downside. So definitely keep your eyes out for that. To the upside, last week's high, or this week's high rather, is going to be important. The Monday gap up, the Friday gap up, and follow through. So, and above that, the 1890 area is going to come into play. 1875 is definitely going to be in play tomorrow if we pivot back to the upside. The 10 EMA is key. If we lose that, there's really not much distance before that gap window opens. The gap window would open right below that and close not down until about 1845 or so on the Murray math box here, and close this gap from last week. Moving on to the NASDAQ side, the NQ side, still struggling with the overhead at 3750 at the 8/8 level. Closed just a little bit below the 10 EMA, so this is the first close below. But remember, we don't change the character of the market until we follow through. We had this close below it right here, but there was no follow through to the downside, meaning that we didn't penetrate that day's range by at least one tick. So if we do so, we're going to turn this to short-term negative. The CCI is starting to roll over, and also note that the MACD is starting to roll, and we're not going to have any support here in the MACD until we get to that zero level. TLTs were up small in the day, still trying to hang on to this 4/8 level. Definitely, you can see using the 50 DMA here as support. We are below the 200 and the 10, which is definitely short-term negative, but still above the 50. There's a couple of gaps to be filled here, so they could easily wind this back up to the upside. I want to talk about gold, which is kind of interesting. If you don't see the pattern here, I think you need to have your screens checked, because we've got a very, very well defined cup and handle here. This is about as clean as it gets. And not only do we have a cup and handle here, we've got a static trend line here for the ultimate breakout signal when we cross above that, and we've also got a 13 exhaustion here buried down at the apex or the bottom of the cup here. So this is really interesting looking pattern. Doesn't mean it's going to play out, but if it does, it's got everything it needs to do something special. I wouldn't even bother worrying about that 8/8 level at 1375. If we break out this cup and handle, I would first look at this this plus 1/8 level at 1406, and then even 1437 half, where the plus 2/8 level comes into play. Keep in mind we're above all three major moving averages. The 50 is sloping up nicely. We're above the 200. That takes a while to turn. Still sloping downward, and this 10 EMA has been on the south side of the settlements for more than a month now. Here's something we haven't looked at in a while. This is the S&P NDX cross. The NDX has had good relative strength versus the NDX here for a while. The reason that this is so important is that the NDX really generally tends to lead the S&P. Tends to be a little bit more economically sensitive, a little bit more interest rate sensitive, and when you put that all together with the leveraged nature of a lot of these smaller NDX names, they tend to move a little bit quicker than some of these larger dividend-paying names. So what we have here is we're coming down to touch the trend line that's been in place for a long, long time. It's going back quite a bit here. Going back to July of 2013, where we started to see some relative strength really exert itself in the NDX, which is definitely something that helped power everything to the upside here in the overall market. This is a really key correlation here. If we start to see the NDX lose its relative strength, that's definitely going to be a warning sign for the bulls, and probably where you really want to start getting a little bit defensive, and even with your longer term stuff, start to kind of hedge your bets here. All right, here's a look at the cumulative advanced decline lines. The New York Stock Exchange is on the top, NASDAQ on the bottom. You can see that New York Stock Exchange has definitely been more healthy than the NASDAQ side. The NASDAQ side is actually curled back down right now to test the previous high. So this is potentially a rollover area and something that really needs to be watched. If the NASDAQ side starts to roll over, and if our ratio of the NDX divided by the S&P starts to break to the downside, this is going to be a key signal that the market's ready to reverse course in the larger time frames. The NASDAQ side will lead. Generally, the broad market side, the New York Stock Exchange side, will tend to lag and be a confirming indicator. So right now, what you really want to focus on is the NASDAQ to see if we start to really dump here and start to lose this relative strength. All right, now let's take a look at the weekly chart of the cumulative advanced decline line. Now the weekly cumulative advanced decline is the one thing that you don't want to argue with. It is the only thing that I've ever encountered in all of my experience of technical analysis that can stand alone. The single thing. When the cumulative advanced decline line starts to roll over, if you fight it, you will lose. This is the one thing that when it starts to roll, if you are on the wrong side of it, you will pay the price. Now let's first take a look at the New York Stock Exchange side. We've got a potential double top in place, but that doesn't mean anything until we address this little low here in the line. If the advanced decline line gets taken out here, that's going to be a potential problem for the overall market. Once it starts to roll, if it picks up velocity, that's going to be a clear indication and the decisive indication that the market has taken a turn to the downside. On the NASDAQ side, we have this high in place, and we've got a lower high in place right now that's not yet qualified. A lower high is not qualified until the low subsequent to the ultimate high has been taken out. So you need a high, a lower high, a low, and then you need a lower low to confirm that this is rolling to the downside. Right now, if this week closes lower, we're going to wind up with a qualified lower high on the NASDAQ side of the market. And as we were just talking about, that's really important because the NASDAQ side tends to lead the broad market. So if this does develop, this is going to be an extremely important technical development for the market, and something that you really have to pay attention to, and you will be very unhappy if you wind up fighting this one. So make sure we check in, you check in on this, and make sure that we don't qualify with a lower low here on the NASDAQ side of the cumulative AD line. All right, here's a look at the individual sectors ranked from best to worst. Let's look at the worst first, because that's definitely what's most important. The defense index was very weak. The broker-dealers were seriously weak all day. Goldman Sachs was rolling to the downside, as were the rest of its friends. So keep an eye on that for a follow-through to the downside tomorrow. Oil services really weak, lagging the overall market. They were weak all day, and that's definitely going to be a cause for concern. Whenever we look at the oil services, we also want to look at the transports. The transports were fairly decent, all things considered, today. One of the better performing stocks. So that mitigates the weakness in the oil services to an extent. So if we see the oil services level off tomorrow and we see the transports get hit, that's not going to be what we want to see. What you really want to see is, since the transports held up today, you want to see the oil services bounce back and reassert themselves if you're a broad market bull. The BKX was also fairly weak. No surprise with the broker-dealers, as sloppy as they were. So that's definitely something that's pointing to potential more downside. The semiconductors are kind of middling here as far as the rankings were, but they were still down at least 0.5%, which is not a great showing. Gold and silvers were up near the top of the list. The consumers and the telecoms, all mostly defensive-minded industries, low beta stuff towards the top here. Here's a look at the BKX. I think this is probably the most important chart to watch right now. What it did was we drove up to this high right here. We set this static trend line, had a 9-bar pullback to the downside, circled the wagons here, and drove back up to retest the high. So right now we're in the process of retesting this high. We've obviously fallen away from that today. We did make a new nominal high on the move, but did not make a new closing high on the move and follow through. So right now this static trend line is extremely important. If we do break this and take it out to the upside, that's going to be real positive for the market. But if we start to roll down here and make a double top, we got to start considering these previous lows back in play here. The other thing to watch is the FAS, which we like to trade at Tradesight. Run a lot of tickets in this one. This is something that's very volatile, but very predictable as well. We did make a new high in this leveraged instrument, but we're 9 days up here in doing so. So we've got this 9-bar run, and we're starting to see the effect of that. We're going to have some support here at the prior high, which was obviously used today. If we break that and start to roll to the downside and gather momentum, this 4ACE level, and then also the static trend line right here is going to come into play. All right, folks, we ran a little bit long tonight, so I apologize for that, but just wanted to talk about what was going on in detail tonight. So as always, thanks for listening. This has been Rich for Tradesight, and please, if you find these videos informational and value added, please give us a thumbs up. We appreciate that.